January the 12th, 2016. Guys, as the markets are closing today, they've tried to stop some of the steep decline, almost like an open wound bleeding to death in the last few weeks. It's been worldwide. It hasn't just been U.S. But today, this afternoon, the Royal Bank of Scotland, the ticker's RBS, as we know it, has sent out a warning. We talked about it a lot last year. Now, in the 700 and something videos that were deleted, there's quite a bit of information about how this was going to be set up. And remember, one of the things and the key things to the Albert Pike letter to bring about these end times in the Luciferian doctrine was economic collapse. Think about that. But they're saying sell everything. 2016 will be a cataclysmic year. I will put a link to the article, but it's so straightforward that it can't help but get your attention. There's no beating around the bush whatsoever, saying the advice is from the Royal Bank of Scotland, which has warned of the cataclysmic year. It says they're advising clients to head for the exit. Do not wait. Do not pass go. Sell everything, they're saying, except high-quality bonds. This is coming from Andrew Roberts from the RBS. He said the bank's red flags for 2016, falling oil, volatility in China, shrinking world trade, rising debt, weak corporate loans, and deflation, all have been seen in the first week of trading. It's been catastrophic. You've got a small, what they call a dead cat bounce today, but we'll look at the chart for the last week or so on some of these things. Now, Morgan Stanley is also warning this week oil could touch 20 a barrel. RBS says that if it falls below 30, the $16 a barrel is on the horizon. Right now, I think it's at 13-year lows, close to $30 a barrel. Gold has dropped below 1,100. Think about that when I warned when it was at 1,900 to start getting out of gold. Roberts went on to say, the world is in a global recession. This terrible cocktail means investors should now be thinking about getting a return of capital, not return on capital. RBS compares the market mood with that of 2008 before the collapse of Lehman Brothers and the start of the global financial crisis. Guys, you know what is the difference now? Is China was an emerging market, and that pulled the stock back up. Remember the investments, the loans, and things like that? This time they're not going to be able to help. When you see their market chart, you'll see they're in worse trouble than we are. So that emerging market lift will not be there. This is a world collapse. Why does it matter? Especially when you've got so many people that live paycheck to paycheck or month to month, depending on your situation. Is because if the stock markets collapse, the banks will close, the ATMs will close. There will be a mass social tidal wave of chaos behind that, just like it was a year and a half ago when they had the problem with the food stamp cards, or the EBT cards they call them, and they were showing the riots at the different Walmart grocery stores. You remember that, guys? It was almost like a test to see the reaction. The reaction was bad. Police had to be called in. But that tidal wave of chaos is part of the plan. Economic collapse. Social collapse. Now, and the data from the Royal Bank of Scotland, they say that China suffered a massive outflow of capital last month in December, perhaps as much as $170 billion, with much of that money going straight into the dollar. A chart showing Chinese outflows in the 2015s is surely now the most important chart in the world, he said. What you've got, basically, if you think about it, you've got two trains that are out of control running head on. Now, we watched oil all year. It's really helped on the price of gasoline, but it can be a very hard landing when this thing happens, because we've seen the disaster as far as the jobs go in the oil industry. So what was the Saudi plan, or whoever deals with the Saudi Arabians in this one New World Order plan, was to stop the U.S. from becoming the economic giant, and it was doing that as far as the petroleum business because of fracking, which was destroying the planet. Well, Saudi drops its prices, starts its free fall, and it shuts down a lot of American drilling. A lot of jobs were lost. Now, if Saudi jumps the price up, we are slave to high energy prices, and it would take a couple years to put everything back online as far as, again, the oil fields, the refining capabilities, the jobs, everything, exploration. And this time, unlike many times in the past when we're dealing with oil rig after oil rig after oil company has closed. This time they had borrowed the money for exploration. In the past, a lot of the big companies had the money. But now the banks are going to lose it. They're declaring bankruptcy at a record rate. And all these hedge fund managers have invested heavily into the oil industry because it was so high at the point that they invested your retirement and your savings in. As we're watching this is a heads up. Be safe.